Moorland, is this the one or no? This one. Operating segments December 2011. Okay. So define operating segments. Okay. The directors of Axle and Velocity have queries regarding the operating segments. The following exhibits provide information relevant for the understanding. Um, 1 second. Yeah. Yeah. This information could be used to answer the questions requirements within your choose response option. Advise the management Excel on issues in Exhibit 1. In relation to Exhibit 2, discuss whether it is aggregate segments 1 and 2 with reference to IFRS 8. Discuss with reference to Exhibit 2. Disclosure of segment information is relevant to an investor's appraisal of financial statements, and comment on the manager director's opinion that investors are not interested in how management derives a return from their investment. Explain the factors which encourage companies to disclose information on sustainability issues, including social, environmental, governance information in their financial statement. Briefly discuss whether the content of such disclosure should be in the company's discretion and any relevant developments in the reporting of sustainability issues. So this particular question have been refurbished. So this, even though this was asked in 2011, this has been amended because sustainability issues were not relevant during 2011. I'm pretty much sure on that part because I've never heard sustainability reporting when I was studying. So sorry. Okay. Exhibit 1, Axel has just check if your textbook, is the exhibits are the same for your textbook. Axel has three distinct business segments. Management has calculated the net assets, revenue, and profit before common cost, which are to be allocated to these segments. However, they are unsure on how they should allocate certain costs, whether they can exercise judgment in allocation process. They wish to allocate head office management expenses, pension expenses, the cost of managing properties, and interest and related interest-bearing assets. They are also uncertain as to whether the allocation cost has to conform the accounting policies used in the financial statements. Okay. So with respect to Exhibit 1, advise management Excel on the issues raised in Exhibit 1. So what should be the answer? What should be the answer? What do you think should be the answer? So what is the question they are trying to ask here? Hmm. Okay. No, but what they're trying to tell you here, what is the problem that the company is facing? Like what they don't know. Yes, the simple answer is they don't know how to allocate the common cost. Now, what are the common costs that we have identified? Okay, so the common cost which they don't know to how to allocate is of first and foremost office management expense. Second, pension expense. Third, cost of managing properties. Fourth, interest and related interest bearing assets. So the requirement here is that you need to suggest a method of allocating these expenses to the operating segment. An easier way to reported, or easier way to report these or allocate these costs to these operating segment. Okay, this is clear. Now, as per IFRS 8, okay, does the standard says that you need to allocate the common expenses or not? So if you want to identify an operating segment, let's say, for example, in my company, okay, there are two segments. Let's say there is ACCA and there is CA. There will be a common expense like a career counselor, which could be a common expense, correct? Do I need to allocate whatever the cost of the career salary, which I'm bearing for career counselor? Should I allocate it to ACCA as well as CA? What if this career counselor is spending 50% talking to the ACCA students, 50% talking to CA students? I should, right? So anything which will have a material impact, correct? All the common costs which will have a material impact for the decision making of that particular segment will have to be allocated, correct? But does IFRS 8 prescribe a basis? Does they prescribe a basis of allocation? They do not prescribe a basis, right? They saying that the basis should be only reasonable basis. You understand? So to give you an example, if you have, let's say, career counselor salary, let's say I'm spending $10,000. Okay. For me, the most profitable department is ACCA. So what I do, I allocate the entire 10,000 to ACCA, but I don't allocate it to CA. But in fact, they actually are spending 50% each in both the departments. Is this a reasonable basis? No, not at all. Why? Because the person who I'm paying $10,000 is contributing 50% of his time to ACCA, 50% of his time to CA. Now, if I allocate the entire expense to ACCA, I'm trying to have a biasness, isn't it? Right? I'm trying to have a biasness because I don't want to show CA segment as loss. Because if I allocate it, CA segment might go for a loss because they have not been established yet. So if I allocate everything to ACCA, what will happen? ACCA will still be profitable. Correct? So is that a bias? Isn't that a biasness? Definitely yes, isn't it? You understand? Is it clear? Right. So first and foremost, it would not be reasonable to allocate the head office management expenses to the most profitable segment to disguise the potential loss elsewhere. Nor it would be reasonable to allocate certain expenses to a segment which does not have any kind of expense. To give you an example, let us say for the example that there are some mentors in my institute. ACCA has all the mentors. CA does not have any mentor. Now, mentor expenses are $5,000. Now, can I allocate this equally to CA and ACCA? No. Why? Because there are no mentors in CA. All the mentors are working for ACCA. So that is also not reasonable, isn't it? Right. So the standard says that all you need to do is to provide a reasonable way to find out to allocate the cost to these segments. So give you an example. Head office management expenses. How will you allocate the head office management expense? On what basis can we allocate head office management expense? Try to think. What is the way we can allocate the head office management expense? Equally, on what basis? Just imagine, no, what if there are, let's say there are 4 segments, 1, 2, 3, and 4. Okay. Now I'm telling you, operating segment 1 has a revenue of, let's say, $10,000. Operating segment 2 has a revenue of $8,000. Operating segment 3 has a revenue of $7,000. And 4 has a $4,000. Clear? Now, operating segment 1 has, let's say, total net assets. This is the revenue. So total net assets of, let's say, 100,000. These people have a net assets of only 50,000. These people have a net assets of only 55,000. And these people have a net assets of only 40,000. Okay, clear? Now, if you take the office management expenses, head office management expenses, right? Head office will need support for those which will depending upon the nature of the business, right? So what if operating segment one, right, has, let's say, support from head office for more than 30% of the staff, right? So it is better to allocate make good amounts to them, correct? Yes or no? So we need to find a basis. So either way, the simplest way we can do is if you put it equally, is it fair enough? Why it will not be fair enough? What if there is 100,000 is the total head office expense? Okay. Now, if you split it equally, divided by 4 is how much? Okay, 100,000 is a bit too much. Let me just. Okay. Let me just say that the head office expenses 20,000. Not 20,000. No, that also is too much. Head office expenses, yeah, maybe 5,000. Okay. Divided by 4. How much is the head office expense? 1250. Now, this is equally split. Now, this guy is making a revenue of $10,000. Just imagine, right? We are family of 4. Okay. Now, parent got one cost. Your salary is $4,000. Parent allocated 1,000, ask you to pay 1,250. Will you agree? No. Let's say your sister is earning twice than your salary. Isn't it? Sister is earning twice your salary. Is it fair for you to pay that much amount, or sister is only paying 1,250? She will have better savings. You will have no savings, isn't it? Correct. So now equal split is reasonable. No, right. So you can split either based on the revenue or net assets, or in fact, depending upon the time spent by that particular segment from the head office. Right? You understand? Sometimes there are common employees, right? HR, finance team, etc. Correct? Now, what is that time spent on these on these segments? How will you come to know? Very simple way. Number of hours. Am I right? Do you understand? Yeah. So now you look at here. So we can say that head office and office management can be allocated based on revenue and net assets. Right? Correct? Now, what about pension expenses? On what basis will you segregate? Okay, just imagine, let's assume segment 4 has only one employee, but he is drawing 50% of that particular company's revenue as a salary, $12,000 as a salary. Now, is it justifiable to allocate pension expense on base of salary? But it is based on employees. On what basis? Sorry? Salary expense. No, not 50%. He's only one guy. Let's assume that he's only one guy. Huh? Only he's below the salary person. So can you allocate now? If he is drawing 50%, rest of them are not drawing that much in other segments. Now, will you allocate higher cost to that? Because the revenue of the company is small and it's a small business. There's only one person. You understand? So on what basis will you? Salary can be one of the way, right? But in this situation, salary can not be the way, right? Very difficult to identify. What if there is a new person joined? Number of employees. Can't you allocate it based on number of employees? Total pension expense is 1,000. There's only one person. You give him number of employees. Right. So you can, as you rightly pointed out, salary expense is one of the way, but might not be justifiable for all types of situations, isn't it? So according to the situations, you have to identify the reasonable way to allocate the expense. So it can be number of employees or salary. Cost of managing the properties. Very good. Size, area, age, value. Right? Yes or no? Go to Lulu as a Lulu shopping mall, right? Now in Lulu shopping mall, there is Lulu's own brands, fashion store, correct? Lulu's own brand, hypermarket, Lulu's own brand, which is Connect. How much do you think Lulu would be spending, or how much would Lulu would be allocating that expense to these each individuals based on the area that they have occupied? Isn't it? Correct, no? So, okay, area of occupation of Lulu hypermart is the biggest. So definitely they will be attracting higher expenses. Area of operation of Lulu Celebrate is less. Correct? So lesser expenses will be given. You understand? So depending upon the area that the particular people have occupied, the management of property will vary. Also the value of the property. What if this fourth segment is in Mumbai? Don't you have to allocate higher cost to that? Correct, no? What if the segment, the biggest segment, which is one for segment one, is situated in let's say something remote district in Thrissur? Do you have enough cost of properties over there? No, not necessarily, right? So value of the property will be very less over there, correct? But still they are able to generate higher revenue. You understand? So based upon where the value of the property is or on the area, the square feet, you have to identify a reasonable basis. Right? And the reasonable basis may depend company to company. You understand? So to give an example, Zoho. Do you know where Zoho's head office is? If I'm not wrong, it is something in Tanjore district. Okay, Tanjore district in Tamil Nadu. The guy like Sridhar Vembu, who's the CEO of Zoho Corporation, he's situated there. So why? So that he can reduce the cost, as well as he wants to expand that particular city. You understand? So depending upon company and depending upon the where the properties are situated, where that particular, you have to identify a reasonable basis. And the reasonable basis can depend upon organization to organization. You cannot say that blanket say that one organization, this is the method we have used. We will use it across all the organizations. It doesn't make sense. Interest and interest bearing assets. How will you allocate? Based on the amount of interest paid to the PNL, net profits basis, you can say, or based on profit before interest and tax, correct? On that basis, you can allocate. Second basis is that who has taken more loan? Amount of loan that has been taken. Value of asset and liability, which is net assets, correct? On that basis also, you can take allocate the interest expenses. Clear, right? Right? The amounts reported under IFRS may differ from those reported in the financial statements, right? Because IFRS requires information to be presented on the same basis as it is internally reported. You understand? So IFRS 8 says that, okay, how you will report it internally. And that's the way you have to disclose. But there could be contradictions. There could be contradictions to the accounting policies. Now, as per the conceptual framework, if there are differences between the standard and the conceptual framework, which takes precedence? The standard. You have to follow the standard over the conceptual framework if there is differences between standard and the accounting policy or the conceptual framework. You understand? So IFRS 8, the reporting basis might be different compared to the reported, whatever the data is reported in the financial statement, because financial statement shows the way it is reported externally as per the accounting policy, whereas IFRS 8 says that reporting should be done based on internal data sets. Right? So, for example, there could be certain segmented information could be reported on cash basis, whereas financial statements are prepared on which basis? Accrual basis. You understand? So it is very vital that you do a reconciliation between the two. You understand? So there has to be reconciliation to be done between the IFRS 8 reported segment and the accounting policy. So the first one, right? The answer that you have to write is that, okay, for the first exhibit, the expectation that they are asking you to do is that, okay, how will you report these segments? What is the basis? So first you have to explain the standard that as per IFRS 8, the all functions, segments, cost need to be appropriately assigned to each of the segment, right? Cost incurred on expenses and assets, right, should be allocated, which will have a significant impact on the financial statements. Correct? Yes or no? And those common costs that the segments accrue should be allocated on a reasonable basis. If they are not allocated, it could lead to misallocation and mislead the users. They might think that a segment is profitable, but in fact, it might not be because the common costs are not allocated. And then you have to give a prescription that how these four costs should be allocated. Then you should say that as per IFRS 8, it is internal reporting. So there could be difference between reportable segment data versus accounting policy. Clear? So there should be a reconciliation that should be completed, is what the standard says. You understood the concept? Right? Any questions? For the year ended 31st March, the directors of Velocity, a public limited company operating in the transport sector, identified the following operating segments. Segment 1, which is a local train operations. Segment 2, intercity train operations. Segment 3, railway constructions. The finance director has determined that segments 1 and 2 should be aggregated into a single reportable operating segment on the basis that the similar business characteristics and the nature of products and services. The characteristics of each market should be: local train market, the local transport authority awards the contract and pays Velocity for its services. Contracts awarded following a competitive tender process, the ticket prices paid by passengers are set by and paid to the transport authority. Intercity market, ticket prices are set by Velocity and the passengers pay Velocity for the service provided. Managing director is pleased about this segment 1 has seen a sharp decline in profits during the year, whereas segment 2 has shown improved margins. The managing director doesn't believe that the segment information is relevant to investors. He believes that the investors simply provide funds, aren't interested in how management derives a return for them. Okay. So your requirement is that with respect to exhibit 2, discuss whether it is appropriate to aggregate segments 1 and 2 with respect to IFRS 8. Discuss whether disclosure of segment information to the relevant investor and comment on the managing director's opinion that investors are not interested on how management derives a return from their investment. So what do you think? I want to know your opinion first. Okay. So first and foremost, first requirement is that should we combine segment 2 and segment 1 and segment 2? Should we aggregate the segment 1 and 2? What does the standard say? Do they allow you to aggregate the segment 2 segments together? As per IFRS 8, is it allowed to aggregate segments together? If they are of similar nature, what are the criteria that they should follow? Nature of the product and service, nature of the production process, types and class of the customers, products and service, methods used, if applicable, the nature of the regulatory requirement. Correct? Yes or no? So operating segment can be aggregated if after applying the quantitative threshold, no segments are found to be reported. So that sentence is very important, that they can combine the segments only after applying the quantitative thresholds. What are the quantitative thresholds? 10% of revenue, 10% of net assets, 10% of profit or loss. Right? This can only be done if operating segment have similar characteristics and segment. Right? Clear? And management has a choice whether they want to aggregate or not. Isn't it? It's not mandatory that they have to aggregate. If they do not follow the criteria, it's not mandatory they have to aggregate. They have a choice. Correct? So based on the useful information, they can aggregate. Right? But the question is segment 1 and segment 2, are they in the similar line of business? Are they in the similar line of business? What do you think? Read it and just see. It's a very high time that I need your opinion, right? So I want your opinion. Would you read it and see that whether they are aggregatable or combinable segment? Because what is the nature of operations of segment 1 and what is the nature of operation of segment 2? Try to identify whether they are in the similar nature. Do they have similar products and services? Do they have similar production process? Do they have same type or class of customer? What is the method of distribution? Regulatory requirement is are they same? Just think that. Okay. So what does that indicate? Revenue cannot be same, isn't it? Right? So which means the customers, the passengers who are in segment 1 and segment 2 are actually different people. Correct? So it leads to the revenue risk. The company will be vulnerable to revenue risk, isn't it? Right? Because what happens in terms of a local market, the decision to award the contract is in the hands of the local authority, correct? Right? And they are the ones who are actually setting the prices and pays for the services. So if let's say, give an example, is let's assume that Kochi Metro is operated by whom? The Kerala government. So if the passenger falls, I mean, in the sense reduces, number of passengers who are commuting via metro reduces, will Kochi Metro standalone will have issues? No, because they are funded by the government. Isn't it? Isn't it the same way over here? So if the company, if Velocity is not able to generate enough passengers, will they be, getting the revenue risk? No, because the whatever the said and done, the contracts are awarded following a competitive tender prices. The ticket prices are paid by the passengers, are set by and paid to the transport authorities. What we will get, what Velocity gets for the services that they are rendering. Isn't it? Only for the operations they are rendering, they will get the amount. Isn't it? Is this clear? Correct, right? It's just similar to say that, oh, you know what? Let us say that V Guide goes to a college. Now we say that if you have 5 students, we will charge you. You take the whatever the revenue you want. Okay. You just give us for the number of hours we are teaching. If there are only 1 student, will it affect my revenue? No. They have to pay me for the number of hours I am charging. You understand? But if the agreement is such that even if there is only 1 student, I will pay you only X percentage of the revenue, then my revenue is a risk. Correct? So in this first equation, there's no revenue risk for Velocity because they are not bearing the risk. The risk is borne by the contractor, right? The person who have taken the contract, the local transport authority. So they are not exposed to passenger related revenue risk. Correct, right? By contrast, in the intercity market, the customer ultimately determines which train route they have to take, correct? So the company is exposed to the revenue risk. So it does not meet the criteria of the third one, which is the type or class of customers for their products and services should be similar. Are they similar? Not at all. Isn't it? So hence, can you say aggregate it? You cannot. You have to show it separately. Correct? Is this clear? Any questions? So any route, when they're asking you any question, they're asking you to comment on the accounting impact. All you first you need to do is quote the standard, quote the definition, right? Critically evaluate the definition along with the points that's given in the scenario and give your conclusion. See, even if let's for the matter, if you feel that it should be segregated, you gave a conclusion that it should be aggregated. I'm sorry. You said that it should be aggregated. Okay. You gave a wrong conclusion. The marks you will lose is less because your approach was appropriate. But only thing is that you derived a separate, different opinion. Isn't it? Still, you will score some marks. Why? Because you quoted the standard. You understand? You might not get, let's say, out of 4 marks, you might not get 3 marks or maybe 4 marks, but you might still get 1 or 2 marks. And that is a deciding factor sometimes. You understand? So not attempting the question, attempting it in a proper manner, even if your answer is going wrong, it doesn't matter. If you are getting an appropriate opinion, don't bother always about too much on that part because you might go wrong. See, when I read a standard on a blanket area, right? When I read that standard, when I read a scenario, I might give an opinion incorrectly first. See, in a real life, in a practical world, you cannot, get some opinion immediately. You have to get the facts. You will say that we'll get back to the client. We will review the reports and we will get back to the client. Is that clear? Okay. Now, relevance to the investor analysis. What is happening over here? What is happening over here? What is the management director trying to do? Think what he is trying to do. Think from the situation. Now, you have to combine the requirement 1 and requirement 2 together. What is he trying to do? The managing director is pleased about this segment 1, that this as segment 1 has a sharp decline in profits, whereas segment 2 shown an improved margins. The director doesn't believe that the segment information is relevant to the information investors. He believes that investors simply provide funds are interested in how management derives a return from them. Do you really think that the investors will not be interested in the segment information? Do you think that investors would want to the business to keep one segment which is a loss making? No, they want to stop that segment, isn't it? That's why we have restructuring. Businesses will stop the services if they feel that that particular business is losses. For example, Ford stopped operations in India because they felt Indian operations are at loss and they are not having the competitive edge. They can't survive in the near future. So they stopped this. They stopped injecting funds to India, isn't it? So similarly, you need to understand that for investors to take decisions to provide about providing resources to the entity, to support the entity, to stay invested in the entity depends upon the return on investments. Correct? So you should say that you should first contradict the managing director's view. You should say that the IFRS 8 provides information which makes the financial statement more useful for the investors. And the objective of the financial statement is what? Is to provide information to the users to take decisions with respect to providing resources to the entity. Correct? In making those investments decisions, investors or creditors are likely to make their own investments to calculate what are the returns from their investments. Right? So for that, they need to know, they have to know what is the resources available, what is the profit generated, right? What are the information? Everything should be appropriately presented. Correct? Now, we are suggesting that segment 1 and segment 2 should be combined. Now, if we combine segment 1 and 2, what is the risk that we are facing? What is the risk that we are facing? So let us assume segment 1 and segment 2, the profits okay, is let's say loss of 10 and profit of 30. So what will be the net profit? 20, correct? So if you combine, you will show this, right? You will think that, oh, this segment is good. This segment is actually profitable. But because you are, supporting one segment, which is loss making, segment two is a profit making one, and segment one is a loss making one. Segment two is actually supporting segment one, isn't it? And their profits are going down. If you stop this segment, what happens? You will have a higher profit, isn't it? Higher return, correct? So isn't that an valuable information or a useful information for the investor? Yes, definitely yes. So as per the managing director, he believes that this information could be combined, but which is not appropriate. Because if you combine this information, the fall in profit of one segment will be compensated by the other segment. And we will continue to invest in a segment which is not giving us enough profits. The fact that the finance director, the managing director wants to combine this information, right, is a bit of alarming. Why? Because raises concerns. Why? Because it shows management bias, the intention of the management. So we need to determine whether there could be investigations in place. There should be investigation in place to determine if there is any unethical practices that are taken place. Is it clear? Right? Okay. Any questions? Okay. Now the last question in this particular answer, in this question is explain the factors that encourage companies to disclose information on sustainability issues. Why do you think why do you think companies disclose information on sustainability? For what purpose? What will be the answer to that? What do you think? Why do you think sustainable information is being presented? Hmm? For whom? So if a financial statement is presented for whom? Shareholders, investors, users. So ultimately, a wider sector are the stakeholders. Now, for financial statement, shareholders might be the stakeholder, creditors might be the stakeholder, likewise, correct? Correct, no? Give me a second, guys. Okay. So, all right. So we have financial statements are where we report to for various stakeholders, right? See, ultimately, any report you do, you are giving it to the stakeholder, right? Now, when it comes to financial statement, which segment of stakeholders are we reporting to? Shareholders, government, be it creditors, correct? So, who are financial interest in the company? When you talk about sustainability reporting, to which group of stakeholders are you trying to report to? To which group of stakeholders? Not just shareholders, right? Not government, okay, to a fact that government, whether the company is actually contributing to the sustainability environment or not, yes. Investors, there could be a group of investors who would be interested, again, fine. But which majority who will be very interested? Social groups, environmental social groups. It's a part of public interest reporting, isn't it? Right? For people who have more interest towards what that particular entity is trying to achieve. Correct? So what you need to write is in this information is that there are what are the factors which the question is what are the factors which encourages people to disclose about sustainability reporting? What are the factors? The fact that they would like to inform to in report to the various sectors of the stakeholders, isn't it? Right? To show the impact the company have on the or the company's effect or impact the company have on the environmental and social aspects. Correct? That's one of the factors. Correct? Second is the company's financial viability or the financial performance, which can get impacted because of the sustainability issues. Yesterday, we discussed a question where the loan IFRS 9 was having expected losses because they gave loan to someone and because of climate issues, their business went down and they are unable to pay back. So similarly, example is COVID. What happened in the case of COVID? Many businesses actually failed. Why they failed? Is it because of they didn't manage their cash flows well? No, because they were not ready for a rainy day, isn't it? They were not ready when the world was shut down. The business didn't have customers and they were unable to survive. For a 1 year or a 9 month period, they were unable to survive because they had zero revenues, zero profits. Correct? Do you understand? A major case example is hospitality sector. Correct, right? Hotels were shut down. You understand? So what is the impact the sustainability will have on the entity's financial performance and the ability to create a long-term value? Will they be able to increase the shareholder value? Correct? Will there be a perceived as a better investments or not? Will be considered as a will be the next factor why we will be reporting. Correct? The sustainability related matters. Right? Yes or no? The second aspect is that the other aspect or the other factor is that anything that does not is not just part of the financial aspect, any other external factors that could affect the financial performance of the entity could also be a factor, right? To give you an example, right now the company what they knows relating to the financial information is very little, correct? But that's not just the factor that could affect the entity, isn't it? Right? If their employees are not happy, do you think that their performance will be good? Don't you think that the investors would like to know? Correct? So that is another factor that we are trying to mention here. What are the problems that the company might have? Right? Which will help them to identify the areas of risk, which are not just financial risk, but potential non-financial risk the company might impact with respect to the sustainability related issues. Correct? I'll give you another example. Let's take a case of umbrella. Umbrella business is very sharp or very high during the 3 months when it's monsoon. That's when they are the most profitable. Umbrella, raincoats, etc. What if in coming years, 10 years, 15 years down the line, the number of months of rainy day season reduces? Do you think that every umbrella company can sustain? So is it their financial stability that is affecting them? No, it's the climate change, isn't it? Correct, right? Now, which business is actually, booming very well is the AC business. Right? Just imagine 3 years back, like I think, something that I realized is that last year during summer, to fix an AC to get an appointment was very difficult. We had to wait till 15 days to 20 days. You understand? So during summer, the amount of AC consumption is very high, and new products will be launched during that time. You understand? Right? So ISSB, although we don't have a financial accounting standards with respect to the sustainability as part of the legislation requirement, right? What is the now that has been created is a sustainability standards board. So isn't that a factor? Regulatory changes. Isn't that a factor? Yes or no? So when we talk about the factors, what are the various factors? The first factor is the stakeholders. The second factor is the financial performance being impacted, correct? Right? The third one will be information available, the relevant information that is available, correct? Information available. And the fourth factor will be regulatory requirement, which is the ISSB standard that has been established. Correct? You got the concept? These are the 4 reasons why we will need to report on the sustainability related matters. Now, coming to your question, which is there in your question, can you just give me that laptop? Companies are increasingly disclosing information on sustainability in their annual reports. Sustainability as it relates to has 2 fundamental aspects: outward, inward, in, and which company considered as dependencies, and inward, out, which considers companies as impacts. Correct. So impacts and dependencies. Impacts means because of their functioning, what is the impact they are creating on the sustainability environment. Dependency means how dependent these companies are on the environmental aspects. Briefly explain these 2 aspects of sustainability, providing examples of dependencies and impact, and discuss the factors that have resulted. So we have already discussed the factors. So the second half of your question have already been answered. But now in this situation, they are asking you to discuss about the impact and dependencies these sustainability reporting will have. So what are the impact and dependencies? And with an example, correct? What are the impact the company will have? What is the impact the company will have? Sorry? Potential loss due to sustainability factors, right? Correct? Maybe let's say, for example, I am someone who is dependent on, or say, let's say I'm someone is creating, let's say, a cloth fabric. I might have higher pollution. Manufacturing industries, what will be the impact? Air pollution. If I am someone who is manufacturing electricity, I will have huge impact on the environmental protection, correct? Because I'll be cutting down trees. If I'm building a factory, expanding my factory from 1 lakh square feet to 2 lakh square feet, what is the impact I'm creating? I'm cutting down trees, right? Now, what are the dependencies I have? If I am a, let's say, wood furniture manufacturer, I'm dependent on the quality of the wood. If the quality of the wood is not good these days, what will happen? Yeah, it will get affected, right? Regulatory changes. Correct? I might be impacted because of the regulatory changes. If I'm a car manufacturer who's manufacturing petrol and diesel engines, do you think that it will be sustained for a long term? No. You are required to move to non-polluted in the manufacturing company. So that is your impact and your dependencies. So in sustainability reporting, we are required to mention the impact and dependencies on 4 aspects: environmental, social, right? Economical and political, right? Environmental will be the damage that we are creating to the environment. Social will be the society that we are living in, which is nothing but the human. right? Economical is what is the economic impact due to these climate change or something. And political, because of political changes or regulatory changes in the environment aspect, how am I getting impacted or not? You understand? So that's what is impact and dependencies talk about, right? Now, again, this is a hardcore theory question, right? It has nothing to do with the scenario. You don't need to link to the scenario, but read that particular topic, which is of sustainability. You understand? Right? So here, 4 marks will be given to talk about this aspect, which are nothing but the factors, and 4 marks will be given to talk about the impact and dependency. What I'll do is I'll create a summary of this and I will give you. You can also read this because by reading this, you will be able to understand what you should be writing in your answers if you're asked anything related to this particular question. I'll just summarize and give it to you. Just read this. You can expand it in your answers. Clear? Right. Any other question? Okay. Right. See, one thing that I'm very particular about is that it doesn't matter if you know the standard in and out. If you're not able to apply it to the scenario, you're not going to score marks. Right? So if you want to score marks, it doesn't matter if you know the standard or not. All that matters is, are you taking information from the standard and giving your opinion of that standard to this relating to the scenario? If you're able to do that, you will score marks. Otherwise, you will not score marks. Is it clear? You understand? So the most important aspect you need to focus on is, how do I apply the standard to the questions? So for that, you have to read a lot of questions. You have to read a lot of scenarios. And before reading your answer, even if you're going wrong, take a moment to write, maybe point out the matters that you feel that it is right or wrong. And then you read the answer and compare your answer. You understand? Because that application, if I can do 1,000 questions. If you have not got the gist of it, you will find it difficult. So for that, you have to sit and practice the questions. Only then you will get the gist of those applicability skills. Because I cannot impart applicability skills in your mind. I can give you pointers or give you suggestions on how to improve your applicability skills. Right? You understand? So don't think that, okay, you know what? If you don't sit and do question practice, you will pass the paper. You have to sit and do question practice, because only then the applicability skills you will get. So even if you read the standard, go and read IFRS from the IFRS website, you will not pass. All you need to do to pass is actually to practice a question, because only when you practice, you will get the applicability of that standard. Right? And even if you're making mistakes right now, it's okay. It doesn't matter. Don't get tensed, because it's the right time to make mistakes. Only then you will learn. Every mistake that you make is actually a point of learning. This is clear, right? So let's do a couple of more questions during this after this break. Okay, so we'll take a break of, let's say, 15 minutes, right? Okay. So this question is part of the specimen exam, and I want you to firstly read this particular question, which is part of the section A question, and it's having some ethical issues that we need to identify. So if you look at here, the accountant of Abbey is concerned about the disclosure of trading that has occurred between Abbey and a company that the finance director Abbey is associated with. The director is also attempting to influence the accountant. Should the accountant for issues associated with the consolidated financial statements? First and foremost, the related party transactions. Then you have subsidiary reservation to answer the question requirements. Within you choose your responses option. Discuss the ethical and accounting implications of the director's suggestion from the perspective of the reporting accountant. Professional marks will be awarded in question 2 for the application of ethical principles. Okay. So first, goods from the company. All right, which one of the director jointly owns with his wife, and the accountant believes that this purchase should be disclosed. However, the director refuses to disclose the information, as in this opinion yeah. So there are some network issues here. Okay. So it will be harmful for the business and feels that the information asymmetry caused by such non-disclosure is irrelevant. It is irrelevant. As most of the entities undertake related party transaction without disclosing them. Similarly, the director felt that the competitive harm would occur if disclosure of operating profit or loss was made. As a result, an entity only disclosed measure of total assets and liabilities for the each reportable segment. When preparing the financial statement for the year end, the accountant noticed that Alright has not paid any invoice of several $millions and is significantly overdue for payment. It appears that the entity has liquidity problems and it is unlikely that our white company will pay. The accountant believes that a loss allowance for trade receivable is required. The finance director has refused to make such an allowance and has told that the accountant that the issue must not be discussed with anyone within the trade because of possible repercussions for the credit worthiness of or white company. Okay. So now what is the issue that we are facing here? The related party disclosure issue as well as an operating segment issue, correct? So as per related party transaction, as per IAS 24, financial statement should contain disclosures with any related party, where the transactions and balances with such party have to be reported, irrespective of the amount, right? It is, and related party transactions are materiality by nature. So as per nature, all the information, outstanding balances, as well as the transactions, everything should be reported in the financial statement. But the director is a member of the key management personnel, correct? From whom the goods were purchased jointly or were purchased is jointly controlled by the director. Therefore, it is a related party transaction and it should be disclosed. So the director cannot say that it doesn't need to be disclosed because it is arm's length price or not. No, even if it is at an arm's length price, it should be disclosed. Now, for in operating segments, what happens? IFRS 8 requires an entity to report all the financial and descriptive information about each of the segments if they meet the specific criteria, right? And IFRS 8 does not contain a competitive harm exception and requires entities to disclose the financial information which is provided by the chief decision maker, isn't it? So all the management accounts which the chief decision maker have made, right, may contain sensitive information, and IFRS 8 may require that information to be disclosed externally. So even if it contains sensitive information, you are required to disclose them, isn't it? Correct? However, an IFRS 8 should provide financial segment disclosures which will enable investors to assess those risks and income as management does. Correct? And they should be able to take decisions on that. And yes, there will be sensitive information which will be gone to the competitors, and it could harm the the segments that cannot be, that we can't do anything on that aspect, isn't it? So clear, guys? So however, this is contrary to IFRS 8, which requires information about the profit or loss for each of the segment, correct? Including the expenses, revenue from the external transactions, etc. Right? Income tax, everything have to be reported as per IFRS 8. So the company or the director cannot say that, okay, there could be competitive information, so we are withholding some information. No. As per IFRS 8, what are all supposed to be disclosed, you are supposed to be disclosed. And there could be information, but it is not thinking that it might harm the business. It is to protect the investors' rights, isn't it? Investors are the right for information. So it is to protect the investors' rights that we are requiring this information to be disclosed. All right. Subsidiary fair value adjustments. Additionally, when completing the consolidated statements, the director has suggested that there should be no positive fair value adjustment for a recently acquired subsidiary, and has stated that the accountant current position is dependent upon the following these instructions. The fair value of the subsidiary is 50 million above the carrying amount of the financial records. The reason given for not valuing the subsidiary's net asset is that goodwill is an arbitrary calculation which is meaningless in the context of the performance of the evaluation of the entity. Now, what happens if there are fair value adjustments of assets? What we should do? Your net assets of the subsidiary will increase, correct? And what will happen to goodwill? If the fair value of the asset increases, net asset of the subsidiary will increase, so goodwill will decrease, reduce, opposite effect, isn't it? Because net asset increases, goodwill reduces, right? And majority of the fair value relates to what? Property, plant and equipment, correct? And because of that, what happens? Extra depreciation will be charged, isn't it? There will be additional depreciation, which will reduce the post-acquisition profits, correct? And this will impact the profitability of the consolidated financial statement. Yes, because if there is higher depreciation, lower the profiter will be, correct? So to avoid this, right, where the goodwill will reduce, so technically the assets will reduce, isn't it? To avoid in reduction of profits, the accountant is trying to manipulate the data, isn't it? So can he do that? No. So accountant should act ethically and cannot ignore the accounting aspects and such adjustments, because it is mandatory as per IFRS 3 and IFRS 13 that adjustments during the time of consolidation with related to the fair value adjustments will have to be taken into consideration. That should be your opinion. So what are we doing here? Every statement, we are taking the accounting, we are identifying the misappropriations done by the management, we are giving the right standard explanation and giving our opinion what they should be done, isn't it? That's all we are doing here. Clear? Goodwill impairment calculation. Finally, when preparing the annual impairment test arising on subsidiary, the director has suggested that accountant is flexible in the assumptions used in future expected cash flows so that no goodwill arises. So this is management bias, isn't it? Just because they want to keep the goodwill with the same amount, they are trying to manipulate with the assumptions and estimations. Can they do that? No. They have to take a proper basis of assumption, right? And should be able to calculate the market assumptions and should consider the time value of money and the risk associated with that is assets, right? So if you reduce the impairment, it will have a positive impact on the financial statement. Why? Because the goodwill will be higher, asset will be higher. If there is impairment, then your retained earnings will go down, your profit will go down, correct? If you don't show impairment, your profits will be higher. So management and people can take higher bonus, correct? Yes or no? And this involves a professional judgment, because when calculating impairment, it involves judgment, because there are certain assumptions to that, isn't it? Right? So he specifically suggested that the accountant should use a discounted rate reflects the risk of the future cash flows have been adjusted. He indicated that he will support a salary increase for the accountant if he follows the suggestion. It is like bribing, isn't it? It is unethical treatment. Correct? Yes or no? So just for a salary increase, you cannot show an inappropriate accounting, isn't it? Right? So that shows the management bias. Right? So the inappropriate financial reporting arises if the risk and issues involved with the company is not appropriately presented. Is it clear? Right? Now, what are the ethical issues we have identified here? What are the ethical issues we have identified? Firstly, in the case of related party transactions, who is the director? Is it the director? The director, correct? The director is acting unethically, isn't it? And he's not following the ACCA's code of ethics. Correct? Saying that, okay, you know what, I will, not apply this presentation, or I will not properly present this IAS 21. No, directors cannot choose the standards which they do apply and do not apply, isn't it? Correct? Second thing is that in terms of ethical issues, discuss the ethical and accounting implementation of director suggestions from the perspective of the reporting, from the perspective of the reporting accountant. So that's one thing. Yeah. So here the director is suggesting to make some matters not clearly present, right? So this is actually a part of unethical behavior, correct? He's not acting with integrity, right? The director should act in the manner of ethics, right? And he should follow ethical practices, and he should guide the accountant with the proper ethical channel, correct? Right? If the director refuses to comply with the accounting standards, then what should the accountant do? He should try to discuss it with other directors or the audit committee, correct? Or take professional advice from ACCA. He should also consider to take legal advice. An accountant might come under pressure from senior colleagues to use inappropriate valuations or disclosures, isn't it? This discussion should try to confirm the facts, and the reporting guidance needs to be followed. Financial reporting does involve judgment, and there will be some differences of opinion, but the accountant should keep record of all the conversation and discuss the matters with the deciding authorities, like such as other directors. And if still there is a huge pressure involved, resignation should be considered, because as an accountant, he cannot maybe change the director's mind. He might be doing unethical behavior. He should try to, if it is a listed client, then there will be definitely audit committee. He should try to bring these matters to the audit committee or to the non-executive directors, or do a whistleblowing, or take advice from professional services. But if nothing is working out, then it's better to resign, because if you are continuing, and you might also be still a part of that particular unethical practices. Got it? Right? Any questions? Right? So the approach towards this is that, okay, you have to put heading, like put headings for each of the transaction, related party transaction, mention the standard, mention the incorrect way they have used, and mention the correct way that we are supposed to use. Okay. Okay. Yeah. All right. Any other questions? Clear? Yeah. Okay. Now I have identified another question in this particular question is African, which is related to IFRS 13, fair value measurements. Okay. This is a very good question because such questions can be asked, but such questions when we studied are very less compared to what's there in the textbook. So it's a very good question. Affluent company owns several farms and also owns a division which sells agriculture vehicles. It is considering selling this agriculture retail division and wishes to measure the fair value of inventory of vehicles for the purpose of sale. The director is considering several options to value some farmland the company owns. Finally, the directors are preparing for a forthcoming meeting with the shareholders, thinking about the questions they might be asked. Vehicle provides information relating to the value of the vehicles. Okay. Land provides information about the revaluation of land. Mixed measurement approach explains concerns over the mixed measurement approach in valuing assets and liabilities. Exhibit 1. This market currently exists for the vehicles. African has transacted regularly in all three markets. At 31st December X5, African company wishes to find the fair value of 150 new vehicles, which are identical. The current volume and prices in these three markets are as follows. Europe, Asia, Africa, sale price, historical volume, total vehicles sold in the market, transaction cost per vehicle, transportation cost to the vehicle. Okay. Right. Then, uh, then African wishes to value the vehicles at $39,000 per vehicle, as these are the highest net proceeds per vehicle. And Europe is the largest market for African's product. The directors of African are unclear about the principle behind the valuation of these new vehicles and also whether their valuation would be acceptable under IFRS 13 fair value measure. See, I will give you 5 minutes. Read the scenario again. Okay. The question is mention the appropriate accounting treatment. Okay. What they are doing, just mention the incorrect treatment. Okay. Mention the standard. In fact, firstly, mention the standard, how the standard should be accounted. Okay. Think about the incorrect treatment they are doing and what should be the correct treatment. So what do you think? Which is first and foremost, what does the standard says? Sorry? No, it's not IS2. It's IFRS 13. It's fair value adjustments. No, it's not about the inventory. It says that wishes to find the fair value of 150 new vehicles which are available. So even if it is inventory, inventory is valued at net realizable value. Net realizable value, how will you identify? Based on the fair value. So you're trying to identify the fair value of these assets, which falls under the standard of IFRS 13. Yes. Yeah. Vehicle is a non-financial asset, right? Financial assets are what? Receivables, cash, payables, yeah. Loans, assets are loans given, etc. are financial assets. So as per IFRS 13, what does the standard says? Right? Says that fair value is a price, or you can say it's an exit price in the principal market. Right? So which is the market? Which is the market with the highest volume and level of activity. See, not from the entity's perspective, what is the level of highest level of volume or activity? It is from the perspective of the market as a whole, which is easy for us to sell. To give an example, let us say that, just give you an example. Let us say that if there is a, let's say that, let's take this as an example. Let us say that banana chips. Okay. Where is the highest volume of banana chips is being sold? In which state? Kerala. So if let's say I am a manufacturer of banana chips, which will be the best market I can enter? Kerala. Because that's where the highest demand is, isn't it? Correct? So that's what fair value should be measured based on. Where we will have the highest demand, where the highest volume of activity happens. That is what is called as the principal market. The principal market and the market in which the entity operates might be different. You understand? If I am, let's say, someone who is situated in Kerala, sorry, let's say I am situated in Tamil Nadu, for example, and I'm manufacturing banana chips from Tamil Nadu. For me, my reporting market is Tamil Nadu because I'm situated in Tamil Nadu. But what will be my principal market? Kerala, because that's where the highest demand is. Do you understand? That's where the highest demand is, right? So the market in which I have the highest demand, that's called as the principal market. It is not dependent upon the volume or level of activity of the reporting entity's transaction, but rather the market as a whole. You understand? I'll give you another example. Let us say you want to sell a piece of machinery. Okay, you want to sell a piece of machinery. Okay. Let us say that the piece of machinery is extracting, let's put it in this way, that extracts water. Okay, just extracts water. I'll tell you these three states: extracts water, right? And tries to convert it into electricity. I'll give you three states: Kerala, okay, Rajasthan, okay, and then Tamil Nadu. Which state will have this highest demand for this machinery? Machinery extracts water and generates electricity. Kerala. Why? A lot of dams. Correct. So that's the place where there will be highest demand, right? Tamil Nadu does. Okay, Rajasthan is a desert. They will be generating electricity based on coal or maybe based on solar. Let's say now I'm solar panel. Kerala, Tamil Nadu, and Rajasthan. Rajasthan could be the highest now, isn't it? Because it's like fully desert, right? They can install solar panels over there and generate electricity for their consumption, isn't it? You understand? So let's say that that particular manufacturing company is situated in Karnataka. Which is the best market for them? Definitely Kerala, right? That's where the demand is. So when it comes to the principal market, it is not, this is very important, it is not determined based on the volume or level of activity of the reporting entities transaction in a particular market. Yeah. Yeah. Only in the absence of a principal market, we'll use the most advantageous market. Anyway, any given time, you will use the principal market. But if only in the absence of a principal market, you use the most advantageous market. Right? So, sorry? Yeah, question it was given as Asia, correct? Europe, yeah, but it's actually Asia, correct. So you should say that also you should try to identify whether that market is accessible for someone or not. See, just imagine I am someone who is selling locally. Let's say I am selling banana chips only in Kerala because I have only that capacity. I don't have the money to export it to another state or export it to another place. Just because the highest demand of banana chips might be in some other state, does it mean that that market is accessible for me? No. So when you determine the principal market, you should also determine whether that market is accessible for us or not. Right? So the once the accessible markets are identified, market-based volume and activities determine the principal market. Right? In practice, an entity first considers the market whether it can access or not. You understand? So in practice, an entity would first consider the markets it can access, and in the absence of a principal market, it is assumed that the transactions would occur in the most advantageous market. That is the market which would maximize the amount which would be received to sell an asset or minimize the amount which would be paid to transfer a liability, taking into consideration the transaction and transport cost. Right? So in either case, the entity must have access to the market on a measurement date, although an entity might not be required to be able to sell the assets on that date. So even though they won't be able to sell or transfer the asset on that particular date, They should be able to access that particular market. If they are not able to access that particular market, then we should identify the most advantageous market, isn't it? Right. Okay. So for if there is a principal market for the asset or liability, the fair value measurement requires that the price will be the market price minus transportation cost, isn't it? They will not consider transaction costs. And should not consider transaction cost. Okay. So now we are giving the conclusion. In African's case, the principal market would be Asia. And then I'm just writing in pointers, and hence the fair value price will be, what will be the price? 38,000 minus 400, correct? Sorry, 700, which is 37,300, correct? Will be $37,300, which is 38,000 minus 700. So, and the total fair value will be 150 into 37,300, which is equal to $5,595,000. Right? And the most advantageous market will be Europe. All right. And yeah. Okay, clear? Right. So this is for how many marks you might have to expand based on the number of marks. Yeah, 8 marks. So 8 marks, you can explain the standard, and then you just have to maybe give it more like more explanation. Like I've just summarized it. So you can say also critically evaluate that Europe is not the market, and they have used a transaction cost which is not proper, etc. Okay. Any questions? Uh, yeah. Which is the next one? Yeah. So using Exhibit 3, discuss the impact which may have on analysis of financial statements by investors. So African is about to hold its annual general meeting with shareholders, and the director wish to prepare for any potential questions which may be raised at the meeting. These have discussions in the media the fact that most relevant measurement methods should be selected for each category of asset. The mixed measurement approach is used by many entities when preparing financial statement. There have also been comments in the media about the impact the measurement uncertainty, price volatility can have on the quality of the financial information. So what does the standard says, or what does the conceptual framework says? The conceptual framework describes the characteristics of historical cost and current value measurement, isn't it? And when it may be appropriate to use. Correct? Some of the investors want to use a single measurement basis for all the assets and liabilities. Correct? Right? Some of them might, agree to use a mixed measurement basis. And majority would prefer the relevant measurement method, which would be mixed measurement. But provided it is consistent with the conceptual framework. Right? Now, what are the problems of mixed measurement? The mixed measurement is sometimes for certain assets you will use current value, which is the revaluation model. Certain assets you might use what? Cost model. For certain types of transactions, you might use some other measurements, and certain other transactions you will use other methods, correct? So the problems of mixed measurements are outweighed by the greater relevance it is achieved. The mixed measurement is the most recently issued in standards like IFRS 9, IFRS 15, etc. Correct? Which applies like cost allocation. IFRS 15, which applies cost allocation. In IFRS 9, you are allowed to use either cost or fair value model. Correct? So most accounting measures of assets and liabilities are uncertain and require estimation, isn't it? With a historical method, it is easy for us, correct? If you use one single approach, like historical method, it is easy for us to identify the cost, isn't it? But when you use a mixed measurement approach, the fair value, to calculate the fair value, relies on various management estimates and bias. Correct? So there is high uncertainty that there will be biasness from the management. Isn't it? Correct? Further, if the asset or liability is highly volatile, then what happens? It will management would like to conceal those information, because if an asset is very volatile and if the value is very down, that will get reflected in the financial statement. Isn't it? So, and you have to calculate the gains or loss because of this volatility. So due to that factor, right, it is, even though mixed measurement approach gives relevant information, correct, but there is a greater difficulty that will be faced to calculate value based on mixed measurement. This is clear? Any questions? Okay. Okay. Now I would like to talk about maybe one question. It should be fine. I think we have covered majority of the questions. Let me see if there is any different question that I have identified. Yes, yes, you have to. Yes, you should. Values. Okay. Yeah. So what you have to do is very clear is that you have to look at certain questions and you have to practice it yourself and come up with certain doubts and questions that you might have. Okay. Next week, a couple of days, what we'll be doing is we'll be summarizing the entire standards. Okay. And certain important standards I'll be summarizing like IFRS 9, uh, intangible assets, this, etc., etc. Even consolidation, certain elements I will be pinpointing, etc. I will also be giving a recording based on current issues like initial coin offering. And I've identified a question on initial coin offering. I'll be doing that and I'll uploading that recording in the current week. So you can watch that as well before their exams. Next week, I thought of summarizing those, topics because it will help you to remember those topics again and again, right? So what you do is for the next 3 to 4 days, practice a certain questions, pinpoint the questions which you are facing doubts. One full day, we will discuss all those questions that you are having doubts on. Okay, and identify where you are going wrong. Clear? Right? So is there anything else that you would like to discuss? Fahim, is there anything you have doubts on? Okay. If not, then let's close the class. We'll meet next week on Monday.